Oh man, so I'm in a long position on Bitcoin, but I continue to remain bearish. How does this make sense? What is going on in my mind? I'm going to break all that down to you guys, plus explain why I think, unfortunately, the next catalyst to the downside could be approaching sooner rather than later. Make sure you stay tuned to the very end, guys. Don't forget to smash up the like button and subscribe. As always, do check out BYBIT and BitGet. Links in the description. If you guys are looking for an exchange to trade, I would highly recommend one of those two, or both. I use both of those. Now, this is what I want to share with you, but I'm going to come back to this because this is going to give you a really interesting take on what is going on. But just to catch up those who aren't familiar, I took the long on this symmetrical triangle breakout. We've had a nice return so far. We're looking for the break of this W pattern to give us a move to the upside. And as we can see here, if I just zoom in slightly on the 4-hourly, we're getting some resistance. We've got rejected a few times here from the neckline, which is this green line of the W pattern. Now, you can call this a W pattern. You can call this an inverse Adam and Eve type pattern. But either way, we're getting rejected now here. And now you can argue this is a cup and handle pattern, right? This can form as a cup and handle pattern. And can we then see ourselves break to the upside? Either way, we're looking to fight this neckline here at 21,900. If I zoom into the hourly, you can see the details of exactly what happened. We ran up, we spiked above. This is a fake out. Never get trapped taking a trade on there. And then we fell to the downside, went back up, got rejected again, went back up, rejected again, and now we're just hovering here. We can see if we pull out the EMA ribbon here on the hourly, you can see we are getting support from the hourly EMA ribbon. So this is acting quite nicely to hold us up here, but we need to see, are we going to get the next push up? Now, you'll see the worrying sign here, and particularly because this is a weekend, we've got very little volume. This volume was good on this candle, as you can see here, but that was a fake out. That was designed there to trap a lot of people into taking this long position, and then the bears throw it back down. Now, since then, you can see that the volume has, on the second attempt, was far less, but still high, and now it's really, really low. Look at volume just trending low here. As expected, it's a weekend. You're going to get weekend volume. So even if we did get a breakout here, I'd be very suspicious on the weekend. I'd be looking at it very intently if you're looking to the enter the position. Now, theoretically here, on a W pattern breakout, you can enter the position on a breakout. Now, personally, you could be waiting for that clean breakout here, wait for the green candle through, and then wait for the next green candle's confirmation. That way you won't get caught in this kind of a scenario where you get a big green candle and then a red candle wicking you out and hitting your stop losses on the way down / messing you up if you're in a leverage trade. Okay, now equally what you can see here on the 4-hourly EMA ribbon, as I mentioned 24 hours or so ago, don't be surprised if running down here you do get a retracement down. There's nothing wrong with that. As you can see, the EMA ribbon is there on the 4-hourly to support Bitcoin, and it's perfectly normal if it comes down, wants to collect some support at 21,000 range, 21,100, even down to 21,000 flat, even up to about here at about 20,900. That's okay. You're going into the middle of your EMA ribbon, collect some support, and then build some momentum to break, maybe even by Monday, if not with the low volume over the weekend. If it happens over the weekend, I will be a little bit cautious because of the low volume, but if we see that volume kick in on Monday, could see the break of that W pattern. Now I'm going to explain why I think this long move, which I'm in, and I'm making profits on this long trade. You guys can join me using BYBIT and BitGet, links in the description. But we need to be very, very wary. I don't want you to go gung-ho and say, we're going back to the moon. So for you guys who are long-term investors, which again, majority of my portfolio is in a long-term position, and this is where the majority of my attention lies, the trading's just for a little bit of income, then what you want to look at is, what is the long-term trend? Are we going to head back to all-time highs? And the reality is we've got our daily EMA ribbon acting as huge resistance here. The bears are in control for a long time. They have been. The on-chain metrics don't look great right now. The global economy doesn't look good. And therefore, we cannot suddenly flip this and say, oh, we're going to head back up to 40,000, 50,000, 60,000. There's no evidence for that. So what we do have evidence for is every other previous time we've had a consolidation, then a fall, a consolidation, and then a fall, and then a consolidation. What we have done a little bit better is have a pump. But we've seen that before. Remember this? After the consolidation, a bit of a pump, gave it back up, bit of a pump, then boom, all the way down. So be very, very careful of this. You can long this by all means on the shorter time frame. Go ahead and do that. And you need to practice how to do that if you guys want to become experienced traders. But you have to be wary of when to get out and have your tight take profits. If we zoom in, what you want to look at is, will this EMA ribbon start acting as resistance? And what are those levels? I mean, as you start to work through the middle of the EMA ribbon, then you're getting to about 23,500. If you go right deep through the EMA ribbon, you're looking at 25,000. Anything higher than that, then you're suggesting, or you're insinuating, that we're going to get a reversal on this pattern. In other words, what we're insinuating is that Bitcoin would be flipping this EMA bullish, and therefore we can get a bigger move to the upside. Now, I don't personally think that is going to happen. I think we can ride this into the EMA ribbon, and I'll be taking profits somewhere in the middle of this EMA ribbon, but I'll be judging that based on the volume and the news being provided. Now, longer term, what is the evidence that we're going to head to the downside? Well, I've just seen something really, really interesting. I've just plotted this here for you guys. What I want to show you is this. What you can tell is I've drawn the white lines as the FOMC meeting, and your bright green vertical lines are the CPI results for that month. Okay, so CPI, and then you've got your FOMC meeting, CPI, FOMC meeting coming up. So this is the latest one. We're going to get July 13th. We're going to get the latest CPI reading. And then on the 27th, the Fed would have convened for the FOMC meeting plus their newest interest rate decision. What's interesting is, let's go analyze the previous situations. And what we'll see is, the previous time this happened, going back onto the 3rd of May, we had the FOMC meeting, and that indicated our peak there, and then we fell. If we take the measured move from here, let's just get that measured move, let me turn the magnet mode off. That will help. There you go. Take that measured move and you take it to the bottom. You saw a fall from wick to wick of about 36% here post the FOMC meeting. Now, that happened in a matter of 5-6 days post the FOMC meeting. So the FOMC meeting happened. You had a bit of a pump on that day, and then you fell to the downside. Then you had a period of consolidation, a fake out, back down, another fake out. Then we had our next CPI reading and our next FOMC meeting. So now we want to take it from this CPI reading / FOMC meeting. You can take it from the FOMC meeting if you want. And what you want to then look at is your measured move to the downside, which took you all the way down another 40%. Okay, so that's a 40% move, just taking it from here on the yellow line there. That's not even taking it all the way from the top. So what we're seeing is a pattern. We're seeing a fall after the FOMC meeting, consolidation, fall, consolidation, and are we going to see that fall again when the CPI reading comes out? And this is the worrying thing. This CPI reading is not far away now. We're a number of days away, 4 days away, in fact. Today and tomorrow's a weekend. Then we get our CPI early next week. And the question is that going to be our peak? Are we going to get the final couple of days of pump up to July the 13th, maybe touching the green line trend, which is another 2 daily candles here, and then we would have fulfilled this W pattern, we would have been done, but we get rejected by this support line, by this green line, and that will also tie in with the CPI reading. So could it be that the start of the CPI reading plus the FOMC meeting could be indication that we get another leg down, potentially down to that 15,000 level, which we've been talking about? And the on-chain metrics were sharing the same data with me, that we're looking for another extended move to the downside. So that is something I'm looking for. Hopefully it doesn't happen, but we just have to be realists by looking at the EMA ribbon and looking at the trend that we're seeing and saying, potentially we could have our next leg down. Is this the relief rally we've seen 3 times before, where we've run up, fallen down, relief rally, fallen down, consolidation, relief rally, fall down again. Now, the only difference we have here is CPI reading comes out on the 13th, and we don't get an FOMC meeting for another 14 days. That's another 2 weeks, which is very, very interesting. As you can see, in the previous 2 situations, they were together. So my question would be, if the FOMC meeting, once the CPI data comes out, very likely, if that comes out higher than 8.6, I think the market is straight away going to quickly price in 1 full basis point, because what we can see now is the market has 92% priced in a 75 basis point rate hike, and only a little bit of the market, and this only happened over the last couple of days, they decided to suddenly price in a 1 basis point rate hike, a full percentage, which I can't remember when was the last time that's ever happened, a full basis point, full 100 basis points increase. Now, if that inflation comes high, if inflation comes in above 8.6, kind of 8.7, 8.8, God forbid if it's a 9, then we could see the market really switch to pricing in a full 100 basis point. Now, don't forget, Jerome Powell ruled it out. Even in the minutes, they said they're not going to see a full 100 basis point increase. But if inflation comes in higher again, that really could spook markets, because their markets are like, what is going on? You've done a 0.25, you've done 0.75, and inflation is not falling. So that could be the catalyst, which from a macro perspective sends Bitcoin back down to the bottom of this trend line. So all I'm saying is we need to be very, very careful. If you're in a long position like I am, using the links in the description, which are affiliate links, then you need to be getting out by this green line. For me, I'd want to be very, very wary at any moment now, particularly up to a CPI reading. I will be out of that long position. I'll be waiting to see, do we get a leg to the downside. Okay, very, very important. Few other things to keep an eye on. Those of you guys who are worried about volume on the Binance chart over the last 24 hours, CZ has posted and said the crazy volume is due to their global rollout of their zero fees trading. They fixed the issue. They said a bunch of people are trying to gain VIP tiers, so they've excluded the BTC trading pair from the VIP calculation so nobody can exploit that. But in essence, we just saw crazy volume. So for anybody who was worried about the Mt. Gox, which I covered off yesterday, go watch that video as well. Loads of people were worried about 142,000 Bitcoin getting paid off in Mt. Gox. Let's put this into perspective. 320,000 coins were traded in a matter of hours, yes, hours, on Binance yesterday. So crazy, crazy volume. Not seen that type of volume since March 2020, which was the COVID period. And just goes to show that the systems and the exchanges can handle that kind of volume. Also, quick update on Celsius, the beleaguered crypto lending platform. I know a lot of you guys do have money locked up in there and are worried about it and want an update. They did manage to pay off their MakerDAO debt, right? They paid $223 million. That enabled them to unlock the $450 million in collateral, which they then moved to FTX. People are wondering, are they going to sell that back for fiat currency? Now we saw that they've started paying off a little bit on their Aave and their Compound DeFi loans as well. So the loan that they had was an outstanding loan of 258. They've dropped that down to 235. And if they can pay off that 235, they can reclaim $950 million in collateral, which is locked up on Aave and Maker. So they'll definitely be key on that. Question is, you can do all this jiggery pokery stuff. The reality is you've got a hole in your balance sheet, so you can fiddle around paying off loans wherever you want. But if you've done the maths that you've only can pay back 5 million and you need to pay back 10, then what's the point, right? We know they've got a 2 billion hole on their balance sheet. Where's that going to magically appear for? So they can sit there with Citibank and any other investment bankers they want, but what are they going to do with that hole? That's the reality. Just do the math and tell people how much are they going to get back, what is the haircut they're going to take, and what is it going to look like. Right, guys, hope you enjoyed your Saturday. Hopefully that update makes a lot of sense on why I am long, even though I am bearish. If that doesn't make sense, jump into our Discord, ijaz.uk/Discord. Also, check out the free PDF. I've gone ahead and I've set up a PDF for you traders out there. So if you guys are trading and you want to keep track of all the different high probability, high converting chart patterns, which I use when I'm trading, I've created this cheat sheet. So all you need to do is take the cheat sheet, free, links in description, and you can print that cheat sheet, keep it on your desk like I do, and any moment you can just look at the cheat sheet, say, oh, that's an inverse head and shoulders pattern, that's this pattern, that's that pattern, and it's super useful for you guys whilst you're trading the markets. Hope you guys enjoyed this video. Smash up the like button and subscribe. Don't forget to check out BYBIT and BitGet, links in the description. Some really great bonuses and crazy giveaways we're doing, so make sure you get yourself set up. We will be giving away that iPad for BYBIT once we get to 10,000 subs, which we're not far off, so make sure you're in the loop for that. And also BitGet, we are giving away free money in our Discord, so jump into our Discord, drop your UID once you've signed up using my link below, and we will airdrop random people real cash into your BitGet account. Hope you guys enjoyed this video. See you in the next one.